Hi there, welcome back. You're still watching Market Fatafat on ET now. Thank you so much for staying tuned. We now have on board with us Arpit Beriwal, Manager Derivative Analyst, Equity Research at Motilal Oswal Financial Services. And Janay once again joins us from the research. Thank you so much for joining us, Arpit. Your first stock you've picked out for our viewers today is Titan. Now, if I pull up the charts, and if I take a look at Titan, last 6 months you have negative returns, YTD negative returns. So what is the trajectory for the stock going ahead? Because if you take a look at the last 1 month also, slightly positive is where the stock has gone 10% returns in the last 1 month. So do you think this up move is going to continue for the stock?
So very good afternoon everyone. If we see overall the jewelry stocks or the consumer stocks has been theme from past couple of days, and technically if you look at the structure of Titan, so it was under pain for the past couple of months. However, in last 1 month the structure has been improved and you're seeing good recovery from lower levels. So the structure on weekly scale, the structure of higher rise ILOs is intact from past 4 weeks, and slowly steadily the stock has moved from 3300 to 3500 and from 3500 to 3700. So in spite of market volatility, the stock is holding strong. On daily scale we have seen some pause. However, on weekly scale the structure is quite strong, and slowly steadily it has given a breakout above 3600 levels on weekly scale. So I think again gradually it can test its previous swing highs towards 3750, 3850 levels. So within the jewelry and the consumer space, Titan would be a safe bet. And as we see, there is quite volatility going on due to global and weakness. So in spite of market volatility, the stock is holding well above its crucial moving averages. So one can go long at current levels or minor dip in between 3650 to 3660 with keeping stop loss 3550 for an upside move towards 3850 zones.
Alright, moving on. Tech Babag is in focus today. It is on the back of an order win. Tell us, Jinnai, what is the order win and what is this all about?
Tech Babag is in focus. This company wins an order from Saudi Water Authority worth about USD 317 million US dollars, which roughly translates about 2,700 crores. Now this order is towards a 300 MLD mega seawater desalination plant in Saudi Arabia. This plant will be developed on a greenfield site located in the west coast of KSA and is scheduled to be completed within 30 months of the starting today. Also, on the back of this order win, management said that this win reinforces company's position in the desalination sector, and this will help company grow further in coming months as well. On the back of this, V8 Tech Babag will be in focus. The stock price did open 8% higher on the back of this, currently trading with the gains of over 3%.
Okay, Janay, thank you so much for that. We just have word coming in from the AGM of Godfrey Phillips that's actually underway right now. Remember, lots of management scuffle going on when it comes to Godfrey Phillips. We also spoke to the management just this week, and well, AGM is underway as of now, and they are going to consider and approve the issue of bonus shares in the ratio 2:1 is the announcement coming in from Godfrey Phillips. And if you see, very sharp spike coming in on the stock as of now, 3.5% higher on the announcement of this bonus issue in the ratio 2:1 that they will be considering in the near future and announcing very soon as well. But well, yes, AGM is underway. Let's just see if any more announcements trickle in on that front. But Ankita, IT sector is something that you are highlighting for our viewers today. Tell us what's that about.
Well, absolutely. IT sector is in focus today. It is on the back of a Morgan Stanley note, where they have maintained an overweight call on TCS and Infosys, and they've raised the target price to 4,900 rupees per share and 2,150 rupees per share respectively. They've downgraded HCL Tech to equal weight with a target of 1,840 rupees per share, and they've upgraded LTI Mindtree to overweight with a target price of 7,050 rupees per share. Underweight call on Wipro and equal weight call on Tech Mahindra is what they have come out with. They feel that the key sectors debate is whether currently rally is really overdone. They think it's not time for investors to lighten their overweight positions. They believe that the revenue upgrade cycle will continue, which should keep the multiples high. The uptick in the BFSI spends is likely to keep the high growth expectations for FY26 intact, and the limited deal wins keep the outlook relatively soft for HCL Tech. So HCL Tech is trading with cuts of 2.5%. Infosys is also trading with cuts of 1.5%, even though there is an overweight call and a raise in the target price. But I think the entire IT sector is, across board, even on Wall Street, is trading under pressure since we've had those recessionary fear concerns. The IT pack has been under pressure.
Absolutely, an outward facing sector at most, and that's why IT is also lagging. But let's also talk about Brigade Enterprises shift focus from IT to real estate now, and this stock is holding up for itself 1.4% higher because this Bangalore-based developer has raised 1500 crore rupees by selling equity shares to institutional investors as part of its strategy to expand its business. The company on 2nd September, remember, had launched its qualified institutional placement, which is commonly known as QIP. This issue had been done to raise funds, and the issue closed on the 5th of September. Brigade Enterprises said that a committee of directors approved the allotment of 1.3 crore equity shares to eligible qualified institutional buyers, and the shares were allotted at an issue price of 1,164.7 rupees per share, which makes the total amount raised by the company around 1500 crore rupees via this QIP route, and on the back of this fundraise, stock is up 1.4%.
Alright, moving on to another counter that is in focus, Indus Towers, another note by Goldman Sachs. Tell us, Janay, what is the note saying for Indus Towers?
Well, yes, the Goldman Sachs have downgraded Indus Towers. They have a sell rating and have hiked the target price to rupees 350 from the earlier target price of 220. What they believe is there is a disconnection between the fundamentals and the valuations of the company, and they see that the Indus re-rating has been overdone now. They see a very limited potential in terms of medium or long-term growth outlook as far as the company is concerned, but they are incrementally constructive on Indus Tower if there is if Vodafone Idea is able to repair its balance sheet. So on the back of this, Indus Tower will be in focus, currently down about 4%.
Okay, so that's the word coming in on Indus Towers. But Arpit, you've picked out Hero Motors for our viewers. Tell us what you are spotting on the chart for this one.
Yeah, so talking about auto pack, we have seen quite a tremendous move the entire auto industry itself, and if you see, the auto sector has been the biggest outperformer from last many months. Within that also, two-wheeler space has been the biggest outperformer. If you look at the chart of the Hero MotoCorp technically, so the stock is strong uptrend. Last week gave a falling supply trend line breakout on weekly scale, kind of a pole and flag price pattern, which has bullish implications. So in spite of market volatility, it is holding strong. On weekly scale, the structure of higher highs, high lows is intact. It forms a strong bullish candle. On daily scale also, the base of the stock is shifting higher. So I think definitely in coming weeks, coming session, it can reclaim its previous lifetime high near 5,900, 6,000 plus levels. So Hero MotoCorp would be a preferred pick within the auto pack. One can go long at current levels or minor dip in between 5,700 to 720, with keeping stop loss of 5555 for an upside move towards 5,900 and then 6,000 plus zones.
Alright, that's the word on Hero MotoCorp. But Pidilite is also another stock that is in focus today. In fact, it was gaining in early trade today. It is after the announcement of a new distribution agreement with the Coltech Group. Under this agreement, Pidilite will become the exclusive distributor of Coltech's comprehensive product range in India. This partnership aims to boost the Coltech's market presence while strengthening Pidilite's footprints in the electronic industry within the country. And right now, it has given up those gains, but Pidilite is nonetheless trading with gains of 8%.
Absolutely, lots of reasons why Pidilite is buzzing in today's trading session. Also on the back of that agreement, like Ankita mentioned. But let's move on. And Arpit, you've picked out Indian hotels for our viewers. If you take a look at the stock price, just on a year-to-date basis, that stock is up 50%. In over the course of 1 year, also 52% gains coming in. Do you think this rally, this momentum that the stock is seeing is going to continue for the near future?
Yeah, so talking about the hotel space, this overall, if you look at the technically, the structure of Indian hotel is quite strong. On monthly scale, the structure of higher highs, high lows is intact from last almost 11 months. On weekly scale, the stock has given a range breakout above 620, 630 levels, and slowly steadily the base of the stock is shifting higher. So it has been a kind of a consumer tourism play, a clear uptrend, strong momentum across in all time frames. Some cool off we have seen from higher levels on today's session, but looking at the weekly structure, the stock is quite strong, and slowly gradually as it's trading near lifetime high, we can see another 6 to 8% rally in this counter. So Indian hotel would be a preferred pick. One can go long at current levels with keeping stop loss of 620 for an upside move towards 700, then 725 zones.
Alright, that's Indian hotels for you. But another counter, Dr. Reddy's, that is in focus today. Janai, tell us, why is this counter in focus today?
Well, as Dr. Reddy's will be in focus as US FDA conducted its inspection at company's API manufacturing facility in Andhra Pradesh. The company has received an EIR, that is Establishment Inspection Report from US FDA, and US FDA classified the inspection as voluntary action indicated, that is VAI, and have concluded the inspection which is now closed under 21 CFR 20.643D. On the back of this, Dr. Reddy's will be in focus currently trading with the loss of about 0.3%.
Thank you so much for highlighting that for us. But as we slip into a short break in this latest episode of ET Now Hangouts, we are getting you LinkedIn's top voice, Dhairya Gangwani, to help you crack the LinkedIn code and how to impress potential employers with the perfect resume. Let's go across and listen in.
Right off the bat, let's get started why we are here today. We are discussing how to be employable by great companies, how to build that perfect resume, and how to monetize LinkedIn as well. But let's get started with how to stand out from the clutter. The first thing that an employer looks at is your resume. How do you build a resume that really stands out from the hundreds of resume probably an HR would be receiving? What are the key effective parts of a resume that one needs to enhance, and what really makes a resume a good, attractive one?
So, like you very rightly said that when we talk about resumes, generally there is a misconception amongst people that your resumes and your CVs that are created, and these are two terms that are used very interchangeably, are the same thing. But the shocking fact is that they're two very different things, right? All of our employable youth who are looking for work outcomes, which is jobs in MNCs, startups, or any other place, whether it's a government job, when you apply for a job, you build a resume. And when you apply to universities to do a master's or an MBA program is when you build a CV, right? And hence, the very nature of the document is different, although, let me tell you, they look very similar. So if I was to place the resume in a CV right here, and if I showed it to you, they would look exactly the same. Because they have the same sections, the section headers are the same. But the content on a resume is more focused towards your skill set, your work experience, and the impact you have created. Because that's what a recruiter is looking for when employing you and you are competing with 1,000 other people, right? So I think three essential elements in a good resume that is attractive versus a normal resume. The first one has to be a resume wherein you have all your details specified in a reverse chronological order. Why a reverse chronological order? Because generally the recruiter is more interested in knowing what you've done most recently as opposed to things you've done in the past. It might seem like a very small detail, but a lot of people have a chronological resume as well, wherein they start with, let's say, 2017 experience, then 18, 19, 20, so on. But it should rather be the reverse. You start from 2020, your latest one, and then go on, right? Because that's what the recruiter is most interested in. The second thing is that people aren't able to articulate their experience and the impact that they've created. Rather, they just focus on what they were supposed to do. So instead of just saying, you know, I was responsible for business development or...
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today. And starting right off the bat, Arpit, coming to you, JK Cement is what you've picked out for us. This counter is doing pretty well. In fact, it is trading towards its, a 52-week high. Tell us, what are you seeing on the charts for this one? It is on the radar for a lot of techies.
Yeah. So absolutely, as we see, we being the trending counters, we definitely focus on the trending stocks, and cement stocks have seen good traction, and within that, JK Cement is a preferred pick. So technically, if we see, it has given a massive range breakout on monthly scale. On weekly scale, it has given a range breakout after 27 weeks. And we clearly see with a good surge in volumes. On daily scale also, it is holding well above its 45, 50, 100 levels. That was the earlier resistance zone. After a sharp up move, it is consolidated in a higher band. So positionally, the setup is quite strong, and in spite of market volatility, there has been some consolidation, but the stock is holding firmly above 4600 levels. 45,500 put rating is intact. So I think positionally from here on, we can expect good 7 to 8% rally in this stock for an upside move towards 4,850, 5,000 plus levels. So JK Cement would be a preferred pick within the cement pack. One can go along at current levels with keeping stop loss of 45.50 for an upside move towards 48.50, 5,000 plus levels.
Alright, thank you for taking us through that. Let's shift focus, talk about Ashoka Bilcon. This stock was in focus. In fact, in the first half of the day, it was gaining as high as 6%, but has simmered down slightly. But nonetheless, 1.5% gains coming in on this stock as well. And this is on the back of the news flow that the company has said that its wholly owned subsidiary, which is Viva Highways Limited, has monetized a land parcel in Hinjewadi, Pune for 453 crore rupees. This is what the company has informed the stock exchanges in an exchange filing, and it says that the land was owned by the company's real estate portfolio, and the company said that its wholly owned subsidiary has managed to monetize this land for total consideration of 453 crore rupees, and this entire amount will now come into the company's subsidiary, and on the back of that news flow, stock is up 1.5%.
Alright, moving on to ABFRL, Aditya Birla Fashion and Retail Limited, that is in focus today. It is on the back of the fact that the Merger and Takeover Committee has approved the allotment of 5.5 crore equity shares to eligible TCNS shareholders as of 3rd of September 2024 in the ratio of 11 Aditya Birla Fashion shares for every 6 TCNS shares that you hold. Plus, in a small piece of news that's come in, that they've also considered and approved of raising of funds by way of issuance of non-convertible debentures, and that amounts to 500 crore rupees. So that's the news flow coming in on ABFRL, but it currently is trading with a cut of almost 1.1%.
Okay, well, let's focus, talk about FMCG major HUL coming in. Arpit, this is a stock that you flagged off for our viewers. If you take a look at the last 1 year, it's only been a mere 12% uptick coming in for the stock. If you take a look at the last 1 month performance, also barely 3% higher coming in for the stock. So it seems to be moving for sure, but moving at a very slow pace. So now what's your outlook on the charts going ahead for HUL?
The FMCG pack, if you see the HUL, the monthly structure for almost last 3 years, it was trading in a range between 2550 to 2800 levels. Multiple times it has touched 2800 levels, but it failed to surpass that in last couple of months also. But this time, if we see the setup wise, it is been quite resilient at higher levels, and the breakout from here definitely gives a sign that the base of the stock will shift higher towards 3000 plus levels in coming weeks. So I think technically it is on a range of a massive range breakout on weekly and monthly scale, and next couple of days would be crucial. If it sustains about 2780, 2800 levels, definitely we can see a slow and steadily move towards 2900, 3000 plus levels. So HUL, and in spite of market volatility, this would be a defensive pick. So HUL would be a preferred pick at within the FMCG pack. One can go long at current levels with keeping stop loss of 2720 for an upside move towards 2900, then 3000 plus zones.
Okay, so those are the levels to spot for HUL on the upside, but let's also talk about Bharat Forge today. That stock is in focus because Bharat Forge actually on Friday is in focus after the Class 8 truck orders in North America were reported early this morning. According to data from the FTR Transport Intelligence, Class 8 preliminary orders in August stood at 13,400 units, which is a gain of 2% from July, but it is down 16% on a year-on-year basis. The figure is also below seasonal expectations, as the average month-on-month increase from July to August has been around 20% for the last 7 years. So very disappointing growth, up move coming in this Class 8, North America Class 8 orders. And on the back of that, Bharat Forge is down 2.8%. But what's also key to note is that the OEMs will now start looking at fresh orders and will now open a fresh new book for next year, starting the end of this month. So that could bring in some hope of positivity. But other than that, as of now, on the back of this news flow, Bharat Forge is down 2.8%.
Alright, that's Bharat Forge. But shifting focus to Bharti Airtel, Jinay, coming to you. Now, rather, Goldman Sachs has given a rather bearish note on Vodafone. They've given a bullish call on Bharti Airtel. So tell us, what does the note say?
Well, yes, Goldman Sachs have maintained their buy rating and have hiked the target price to rupees 1700. What they believe is that strong growth with inflecting free cash flow to returns profile warrants and premium valuations. Also, they believe that the growth tailwind will sustain going forward, driven by continued share gains, organic growth levers and future tariff hikes. Also, they believe that they're expecting actually Bharti's India revenue and EBITDA to grow by 16% and 21% CAGR respectively over next 3 years, and they're expecting further improvement in balance sheet profile, and they forecast a net debt close to zero by FY28 for the company. On the back of this, Bharti Airtel will definitely be in focus.
Alright, Vinay, thank you so much for taking us through that. Arpit, you picked out Chola Finance for us, and tell us what's the view on the charts, because last 6 months this stock has almost risen by 50%. So now tell us what kind of moves are you spotting for this stock going ahead?
Yeah, so talking about Chola Finance, if we see within the NBFC's pack, this has been the biggest outperformer. And in spite the banking space has been dull, but over here the outperformance we have seen in the insurance and NBFC pack itself. So Chola investment, if we see the technical structure, it is in strong uptrend on monthly scale. On weekly scale, it has given a range breakout almost after 10 to 12 weeks above 1440 levels, and we have seen a decent rally also towards 1550 levels. So trading at live highs, this would be a preferred pick. Any dip of 1 to 2% near 1480, 1490 levels would be good entry zone, with keeping stop loss of 1420 for an upside move towards 1600, 1650 zones.
Goodbye, huh? All right, with that we have come to an end of the show. Thank you so much, Arpit, Jinay, thank you so much for joining us today. But before we leave, we're leaving you with this. It's a slice of our very special interaction with the emerging titan, the RPSG group. The father-son duo of Sanjeev and Shashwant Goenka share the roadmap for their renewable businesses. Let's go across and listen in.
So when we look at the renewable energy business that we're looking to set up, we're currently first targeting to get to the first 3.2 and then build up to the 10 gigawatt. And for the 3.2 gigawatt, we've already made good progress both with wind and solar, because we're looking to set up hybrid projects.
Yeah.
And so for solar, for example, we're looking to primarily set up in Rajasthan, where we've already started the process of land acquisition, and we're at various stages for 4,800 acres across the state. And as far as the wind part is concerned, we've done framework agreements with the likes of Suzlon and Inox for already 2.5 gigawatts and some more in the pipeline, and looking at 8 projects across 4 states. So we're looking at Gujarat, MP, AP, Karnataka. So we've got a lot of the groundwork done, I would say, and they're all in different stages of installation. We should kind of start with the commissioning of the first gigawatt from March 26, and 1 gigawatt each year thereafter.
Sure. Now, in terms of the challenges, because at least earlier or historically, some of these sectors, solar as well as wind, have been marred by execution challenges or challenge in, transfer of the, grid availability, etc. Is that something which is streamlining now, you would say?
Absolutely. It's streamlining a lot. And I think both the industries, solar, wind, and overall renewables, has come a long way over the last decade. I think technologies are a lot more established and certain, which give you much better returns today. And as far as connectivity is concerned, like Dad said, there is a good amount of infrastructure that's already set up and a lot more that is being set up. And as far as specifically we are concerned, we've already applied for 3.2 gigawatts of connectivity, 1,600 of which have been in principle granted to us already. So we are moving ahead with it.
If you like this video, then like, share and subscribe to ET Now.